Welcome to Accountable, where your business is our business. Hosted by David R. Peters. Today's guest is Matt Thompson.
Hi, everyone, and welcome to Accountable, the podcast for CFOs by a CFO. I have to tell you that one of the things that CFOs are dealing with now more than ever is that they're being asked to widen their skill set. Now more than ever, CFOs are being asked to take on more and more different company functions. And one of the things that CFOs are starting to get into now more than ever is risk management. And that can be pretty intimidating. I mean, for a lot of folks in their accounting programs in undergrad, maybe even graduate school, you really don't do a lot with risk management. You may understand kind of what risk management is at a high level, but I think it's really different when you're being asked to do it and when you're being asked to manage that for a company. Perhaps there's maybe no more intimidating of a situation than when you're being asked to do it for a new company and you're really trying to build out that risk management function from scratch. Today's guest is Matt Thompson. Matt Thompson is a vice president at ECM Solutions in lovely, beautiful, scenic Charlotte, North Carolina. And what we're going to do today is talk all about risk management and specifically as it relates to small businesses. Matt does a great job of explaining kind of how this stuff works for folks that are in the finance realm. I mean, he is one of those guys who I think just does a great job of taking very technical things and sort of bringing it down to a level where I think he's incredibly helpful. So anyway, enjoy our conversation today with Matt. I think if you are somebody who is being asked to step into that risk management function, I think that he does a great job of explaining some of the things that you're up against and some of the things that you need to be thinking about. So enjoy our conversation with Matt. My guest this week on Accountable is Matt Thompson. Matt is a vice president at ECM. Matt, thanks for being on Accountable.
Thanks for having me.
So, Matt, the primary audience for this podcast is going to be financial folks. It's financial leaders within their companies, CFOs, controllers, those kind of folks. And I think that the thing that I'm probably most curious about is, today our subject is risk management. Why in the world should a CFO care about risk management?
That's a good question. CFO's primary responsibility is watching, maintaining the finances of the company and
right.
Risk management. Risk management has a direct correlation to the top line and the bottom line of a business.
Yeah.
Ultimately, risk management. The intent of risk management is to reduce accidents that could cause financial loss, whether that be injured employees, whether that be auto accidents, whether that be financial fraud of some sort. And it's up to the CFO to watch the dollars and cents of the business. And if they're doing what they're supposed to be doing from a risk management standpoint, then they can watch those dollars kind of go down. And all that, again, directly translates to higher or lower insurance premiums, depending on whether or not you manage your risk effectively or not. And insurance premiums, as we all know, have a direct impact on the bottom line of any business.
Well, and I mean, let's be honest here. I mean, CFOs and controllers, I mean, you're in charge of safeguarding the assets of the business. And so, risk management is a part of that. I think that's very well said. I mean, the thing is that a lot of CFOs, especially nowadays, it's no longer kind of debits on the left, credits on the right for CFOs these days. I mean, they're getting involved in more and more things. and one of them is risk management. And I think a lot of folks probably feel very underprepared in that area. I mean, because, for a lot of us financial folks, we don't have a background in risk management. I mean, the accounting undergrad degree does not include, comprehensive courses in risk management. They just don't happen. And so,
right.
When you have a risk management department, do CFOs still need to make this kind of part of their purview? I mean, is this something that they really should be worried about? Why do you still need? Why is risk management a CFO problem if you have a risk management department to kind of pass it off to?
Well, ultimately, the risk management department has to be accountable to someone. And if they're not doing their job properly, then the CFO is going to find that out in the financial performance of the company. And so, it's always good if you're of a certain size and sophistication to have a risk management department, but the CFO is where those results are really going to show through at the end of the year when it comes time to budget and analyze the finances of the business.
Yeah, I think that's true. I would definitely agree. We talked about how, a lot of the folks that are listening to this, they don't have a background here. They don't have a background in risk management. So if you're starting up a business and, I've started a few businesses and this is a big challenge. I think the biggest thing that I used to worry about as a small business owner and starting up businesses is what I didn't know. I was more concerned about what I didn't know. And I think risk management, I think, is one of those things that, again, I think we just feel kind of underprepared. So how do you go about sort of figuring out what you need if you're a new business and you're trying to get some things in place?
Well, there are a couple of different steps you can take as you're doing some SWOT analysis, some five forces modeling type activities in the planning of the business. You should be getting an idea of what your exposures are, both financial and otherwise.
So SWOT analysis, strengths, weaknesses, opportunities, and threats, that's one that probably a lot of people have heard about. But kind of through that, we use that as kind of at least a beginning point to at least try to understand where risk is. Right.
And then beyond that, it's really about the people that you hire to help you.
Right.
You don't know everything there. The CFO doesn't know everything there is to know about the legal environment surrounding the business. They don't know everything there is to know about the marketing arm of a business. They hire experts. And, that's why choosing the right insurance agent or insurance broker is so important, because that's who the CFO can really, really lean on for guidance and identifying exposures, mitigating risk, minimizing risk, and then insuring away the risk that you can't get rid of completely. And that's ultimately what we're talking about in terms of risk management. A lot of people tend to think of insurance as risk management, and it is, but insurance is just a tool in the overall risk management portfolio toolbox, if you will. There's so many other things that go into managing risk that then translate into how insurance is written and how it's handled. It's really important to partner with a good agency broker who knows how to advise you on the risks that you have, help identify those exposures, and then mitigate them, eliminate them, minimize them, or insure them away as on an as-needed basis.
Yeah, so that was kind of my next question is when is kind of the right time to get the broker involved? Especially if you're working in like startups and things like that. My background's mainly in startups, so, I'll at least speak from that perspective. When do you get the broker involved? When's kind of the right time? We don't want to spend money when we don't have to. That's, and so the question is when do you start to get that broker involved? When's kind of the right time?
I think that's different for every business. Ultimately, I would start getting the broker involved at the same time that you're getting an attorney involved, that you get the CPA involved. We're all kind of part of that same advisory team for the executive board of any business. And while startups may start small, if you start early in planning and managing risk properly, then you will not end up in a situation where you've outgrown your insurance program and your risk management program and find yourself with multiple claims, frequency issues, severity issues, and having to play catch up when you could be spending your time growing your business. It's important to get a broker involved early on, because they can help you identify those exposures, and then at the same time can help you budget what your insurance expense could be, at least for the first year or two of the business. And then as things change, you can reevaluate as you go.
And I think that's a great point, because I think what I heard you say is that really, because the fastest way to sort of break a good idea is to have a pretty substantial claim that you're on the hook for, because I mean a lot of startups, and again no disrespect to the startups out there, I mean but speaking from somebody who deals with a lot of small businesses, deals with who has been involved in the startup world, money's not plentiful. And so even if you got a really good idea and you have really good investors, one way to kill that quick is with a claim. And so I don't know that everybody looks at insurance as necessarily something that that we need to get on board with kind of right away, just because there's other concerns, right? I mean, we're trying to get the business started. We're trying to get it so that trying to get all of the paperwork and everything, trying to get that kind of squared away, get the registration in, and that kind of thing. And I don't know that they necessarily look at that at insurance as being kind of the thing that they need to get on board with. But at the same time, though, I mean, to your point, that's a quick way to kill a good idea.
It is. And insurance is very often an afterthought. You're
Yes.
starting your business, you're planning your business, you've got this great idea, you've built your marketing plan, you've built, all these pieces. And then usually in the case of startups, not really, you get a call a week before they're going into business and they say, I need insurance. And
yeah.
I think a lot of that comes down to lack of understanding of how insurance works and what it takes to put a policy in place.
Right.
Really, I think, unfortunately, the prevailing thought is you just call an agent, you give them the name of your business, and they can just pull a quote off a shelf like a grocery store and hand it to you and everything's right. But there's so much more that goes into writing an insurance policy for a business, and especially a startup, because insurance companies want to see a track record of success and that you know what you're doing. And typically, insurance companies are not going to want to write insurance for a company that's brand new, right? They want to see it. They want to see at least a year in business, if not 3. And so you can expect as a startup, unless you've been in the industry for an extended period of time, have lots of experience running similar businesses, and you've just started another one. Sometimes they'll look at that experience as a plus and they'll continue to move forward. But you can kind of expect it until you have a track record that your rates are going to be probably higher than what they will be down the road. And keep in mind, there's a difference between rate and premium. When we're talking insurance rates, the rate is how the underwriter kind of solidifies what they think your risk is worth ultimately.
Right.
And you take that times an exposure base, which then gives you the premium, whether that's payroll, sales, depending on the business, it could be any number of things. Generally, payroll and sales are the 2 main factors. And so your premiums are going to be low because your sales are going to be low. Your payroll is going to be low as a new business, but your rates could be higher than they will otherwise be once you have some experience under your belt and you're not a new venture any longer.
I think that's a great point. Any sort of rules of thumb or anything like that maybe you can share? I mean, just in your experience, just working with a broker for the first time, or maybe for those people who have been working for brokers for years and just never really got good advice. Any sort of rules of thumb for working with a broker?
Absolutely. I think it's important to find a broker that is experienced in your space, whether you're a construction company or an accounting firm or an engineering firm. Those all require different approaches to insurance and risk management. Construction companies are going to rely more on the safety aspect to keep employees safe, to keep auto accidents to a minimum, to keep construction accidents to a minimum, whereas the biggest exposures for an engineering firm could be, some sort of cyber threat or some sort of financial fraud, inside the office. But it's important to find a broker that's not going to just try to get you the cheapest thing you can get. And what you'll find is that you can go to just about any agency out there and they can write you a policy.
Sure.
Right. But when you're choosing an agent, you want someone who can give you advice on how to run your business in a way that will lower your insurance premiums over the long term. And it's important to evaluate your brokers, interview 2 or 3 of them, find out what their capabilities are before you ever even ask them for a quote. And admittedly, if you're a smaller business, then the broker's not going to probably make as much, and that's kind of taboo to talk about in our world. But you got to have money to provide service, and the bigger the account, the more money they generate, the more revenue they generate, the more service you're able to provide without having to charge some sort of additional fee if it comes down to it. But there are still basic things you can do with your insurance that your insurance agent can do that don't really cost anything. I mean, if you're starting a construction company and you need an employee manual, well, if you pick the right agent, they can help you develop that, and they won't charge you for it.
And I think that that's something that a lot of people don't know. So I just want to take a minute on that, because especially insurance agents, and I think a lot of of our audience would recognize this kind of this analogy. Insurance agents specialize in different industries. I mean, so it's not like it's not like 6 of one, half dozen of the other. That's like saying all accountants are the same. That's wildly incorrect.
Right.
So it's not the same thing. And so and when you do have a broker that kind of does specialize in an industry, they're going to kind of know some of those things. You pointed to construction contractors needing a manual or something like that. I don't know that many people would necessarily first think of their broker as somebody who can help them out with that, and they can, and that's another reason to get a broker on board early, so that they can help you with some of those things. They can identify some of those things.
Absolutely, and I think part of the issue is that there's a lack of awareness on what an insurance agent can do as far as helping your business. I think we're viewed as, low on the totem pole in terms of what we provide. Some people consider us to be transactional vendors. They need an insurance policy. They want the cheapest thing they can get, and they don't worry about the rest of it. But the truly successful businesses out there partner with their agents and brokers, just like they partner with their CPAs and their attorneys. They take advice when they're thinking about making a big decision. They want to know how that's going to change the insurance profile of the business and how that's going to affect premiums. And sometimes a seemingly small pivot can result in, having to totally redo your entire insurance and risk management program. For example, I talked to the CFO of a company a couple of months ago, and they have a family of companies. They produce different forms of hardware, different forms of automation stuff. And then when COVID hit, they decided they were going to start selling N95 masks.
Okay.
Well, you go to an insurance company and say, well, I have a cabinet manufacturer here, and you might find 10 or 15 companies that are willing to write cabinet manufacturers all day long. They're good at it. They know it. They appreciate it. They understand it. But then when you get into the liability of distributing N95 masks for COVID, you cut that down to maybe one carrier that's willing to entertain that if you're lucky.
Right.
And it's going to be expensive. So, the planning process needs to involve the risk, the additional risk that's going to be taken on in a pivot. And, the things you do don't just necessarily affect A and B. You have to really be aware of what could impact insurance risk management, premiums, and that sort of thing, or else you can find yourself paying a whole lot more than you ever anticipated. And maybe the venture is not worth it when you find out that 10% of your sales is going to go to the additional premium that you're spending to insure whatever this new venture might be.
Yeah, I think that's a great point. And you said earlier on that insurance is part of kind of an overall sort of risk management program. So I think a lot of people, they think risk management and insurance are the same. They're really not. Because risk management is about managing the totality of the risk of the organization, whereas insurance is about coverages. It's about covering particular things. What sort of common deficiencies do you see in kind of companies' insurance programs? I mean, what are some? I guess I'm sort of tactfully asking you, what are some of the horror stories that are out there about kind of insurance programs that companies try to put in place?
So it really depends on the industry, but
right.
The two that we're seeing right now, more than anything, the two probably more prevalent issues we're seeing right now are employment practices liability coverage or lack thereof,
right,
and then cyber coverage or lack thereof. Most people, or I shouldn't say most, a lot of people view insurance as auto, property, work comp, general liability. That's it, right?
Yep. Yeah.
They don't think about what happens when they have to let go of a highly compensated executive and they sue for wrongful termination. And now, you can either pay that attorney out of pocket and try to defend that suit, or you've bought employment practices liability coverage and you turn it over to them. They defend the suit for you. If you win, that's great. If you don't, you end up having to pay the punitive penalties, which is not unusual in the insurance world. And actually, I've had several customers where I go to meet with them and say, let's talk about your employment practices. And they say, well, actually, I didn't even think about the fact that I had a policy that would cover this. Let's turn this claim in. We had an equal employment opportunity, an EEOC complaint, or we had a sexual harassment complaint, and we were being sued,
Right.
and we're paying our attorney thousands of dollars. Well, we've got this policy right here that's what it's designed for,
Right.
And then cyber, for example, David, I know you're not, you're probably not the common CFO, but if you were to experience a breach, would you know how to respond and what to do next?
Yeah, I mean, not off the cuff. I think that's, and I would point out too, because I think a lot of times folks think of cyber policies as, just for companies that are really, really heavy into the online selling, and and sort of companies that are very, very, that their website is kind of their entire mode of existence. And that's not really the case anymore. So the fact is that cyber policies are not just for kind of online sales types of companies. And you're
Absolutely
right.
Not.
I would not know off the top of my head necessarily. Let me speak for most CFOs out there. I don't think that most CFOs would really have a clue how to do that. Could be wrong. In fact, I kind of hope I am wrong, but I don't think that they would.
So if you were to walk into your office, 8:00 in the morning, coffee in hand, sit down at your computer, turn it on, and up comes a screen saying, we've locked everything. We've locked your entire system. You need to pay us $25,000 in Bitcoin in order for us to unlock it.
Right.
I think that would probably give just about anybody a heart attack.
Yeah.
If you have the right cyber policy, then you call your insurance agent, you turn the claim in, they give you a breach coach. They pay for most of, if not all of the response to that. They can advise you on how to get your data back. They can advise you on how to get everything unlocked. And if it comes down to it and you decide that the best path forward is to pay the ransom, they can help you procure Bitcoin to pay the ransom. Because I can tell you that if somebody asked me to pay for something in Bitcoin, I would have no idea how to do it. And I think most people would probably feel the same way. And we can talk about risk management. To that angle, what can you do to minimize the risk of being breached, of being taken ransom, of having your data stolen and sold on the dark web? Because the dirty little secret is most people would say, well, I'll just pay the ransom and, that'll be fine. Well, that's fine. But if you pay the ransom, then you're going to go on a list of easy targets. You're a sucker.
Sure.
You're put on the sucker list. You're going to get hit again and again and again. And eventually you're just going to have to pay the piper and put the right systems in place and then buy the right policy to make sure that you're protected when it does happen again. And in the age we're in of technology and the Internet of Things, with everything being connected to the Internet, there's so many different ways for hackers to get into systems.
So Matt, what are kind of some of the hot button issues right now? I mean, what are some things that people should be thinking about, concerned with? What are some things that CFOs should really kind of have kind of on the front of their brain when it comes to risk management and it comes to insurance?
So the best way for me to explain how to differentiate between risk management and insurance is this. Insurance is there for when the accidents happen. Right? It's a reactive product that helps offset some of the financial burden of an accident, whether that be a workplace accident, whether that be computer fraud, whether that be a cyber incident. Risk management is putting the proper procedures, policies, and protocols into place to minimize the risk of that claim happening. Because
right.
the general rule is that the more claims you have, the greater the potential that you'll end up with a big one.
Right.
And the small ones are not The small ones are not that big a deal. Most of the time, obviously, it's all relative. It's always different. But the more small ones you have, the more likely you are to have that big one, because it's an indicator that the behaviors are not there to minimize the potential for that claim. And when the big one hits, that's what you really want to make sure you have a good agent and a good carrier standing behind you for.
Yeah, I think that's very well said. And again, just because you have insurance, that doesn't mean your job as a risk manager is really done. I mean, you're constantly trying to evaluate risk. And again, how does this fit into CFO world? Well, I can tell you guys that are listening here, it fits into CFO world because you are managing the assets of the organization. I mean, at least part of your role as a CFO, as a controller, is to take care of the assets of the organization. That's one of the reasons why we are involved in cybersecurity and in internal controls. And one of the reasons why I think that risk management is an area where CFOs kind of need to step up. This is an area that's and frankly, if we don't step up, it's going to be pushed upon us by the organization more than likely. So it's something that we need to get on top of for sure.
Absolutely. And with regard to dollars and cents, at least as it pertains to the construction industry, the most recent statistic that I've heard is that for every dollar that you invest in safety and risk management, you get $4 back.
There you go. And so, so if you guys are looking for like return on investment, I think that, that I do think is one of the things that I think that folks have trouble kind of connecting. It's hard to sort of see and quantify sort of the cost savings or the revenue that comes from having a risk management program, right? It's hard for us to see that on the financial statements, but the fact is that it's happening. And I think that's important. Any sort of closing messages or anything like that, Matt, that you wanted to share? And if you don't mind, what are you up to? How can people get a hold of you?
We're here in Charlotte. We have an office, 4000 Park Road. You can reach me directly at 704-909-2564. Parting shots, I would say that when you're searching for a broker, when you're searching for an insurance policy or an insurance program, the old adage of price, quality, and service, you can pick two, but you're not going to get all three. It's very important. And the problem with insurance is most of the time, you don't find out what you've got until you need it and it's too late. Yep. It's nice to not have to pay a whole bunch in insurance. And that's not always to say that the more expensive coverage is the better coverage, but it's important to shop on more than price alone. And that works if you never have a claim. But if you never had claims, you wouldn't need insurance, right? I mean, I don't plan on my house burning down anytime soon, but I still have insurance on it, just in case. And you want to make sure that those coverages are evaluated and that they fit your business because, there's no such thing as a one-size-fits-all insurance policy or insurance program.
Yeah. And then I think that's a great way to end here, Matt. There's not one size fits all insurance program for any business that's out there. If you're not sure what to do, folks, there's great brokers like Matt that are around that are there to help. I've always worked with insurance brokers when I've been developing businesses because it's an area where you really need some expertise. And again, it's one of those things that can kill your business, and you may not be ready for it. So definitely something that we want to get on top of. So Matt, thanks so much for joining us here on Accountable, and we greatly appreciate it. Thanks for your time.
Thank you.
Thanks for listening to Accountable. Be sure to subscribe for more interviews and insights from today's business leaders.